So whether you're in first, second, third, or fourth year studying and wanting to become a chartered accountant, financial accounting is one of the topics that you need to master. But how exactly do you go about doing this? What are the tricks? What are the tips? Hi, my name is Kandim Shunane, chartered accountant and learning strategist. In today's video, we'll be exactly answering this question as to how do you master financial accounting? Specifically, we'll be looking at 6 broad areas. The first of which will be knowledge and why knowledge is the foundation of financial accounting. Secondly, the importance of understanding the why behind the topics. Thirdly, we'll look at theory specific topics and how you can actually excel in your theory questions. Number 4, we'll then delve deeper in terms of what are some of the exam techniques that you can implement in order to be successful in financial accounting. Number 5, we'll look at financial accounting specific advice, looking at topics and what you can do for each respective topic to be successful. Then number 6, we'll end off with some general advice in terms of how to excel in financial accounting. Make sure that you watch till the end so that you can get the full benefit of this video. Now, let's go straight into it. The first thing that we need to understand is the importance of knowledge. Now, knowledge is the bedrock of financial accounting. So you would have seen in my previous videos that I've done so far in this series that I've been emphasizing the importance of doing questions. Now, this is equally true for financial accounting, but I want to add something more important to it. What is here is reflective of financial accounting is that it's quite a subject that requires you to apply principles. Because it requires principles in order to get to the correct answer, you do benefit by understanding the topic extensively. Hence, I always recommend, especially at a third year level, when you're still starting out, or second or third year level, where you're still doing closed book exams, try to understand the knowledge to your best of your ability. I actually advocate for a 50% ratio, 50% learning the material and another 50% actually doing the questions. Now, as you learn the material, don't focus on reading the standard per se, but rather focus on understanding why do the principles look the way they do, and effectively getting the knowledge, embedding the knowledge through doing the class examples, practicing and actually embedding the knowledge before you start actually answering the questions. Why that is important is specifically it links into my second point, which is the importance of understanding the why behind the topic. Now, as I've already alluded to, financial accounting is a topic that relies on a set of principles that are governed by international accounting standards or international financial reporting standards, which is IFRS. Whether you look in I or IFRS, the principles are important to answer the question. And that's why it's important to understand the why behind why you're doing this. A lot of students make the mistake of understanding the calculations. When you do the calculations, sure, it looks simple enough, but the reality is that when you go into the exam room, they start asking theory intensive questions. They start asking you to critically evaluate and analyze. And that's where you're found wanting. So instead, I want to actually understand the why behind the principles. Let me take you through it. The important thing about financial accounting for you to grasp at this stage is that it's always based on an economic phenomenon. What do we mean by this? Financial accounting is the language of business. It's trying to communicate to users how the business is doing. So in effect, they can make more informed decisions. And that's why, to its best potential and ability, financial accounting will always try to depict the economics of every single transactions. This means that you have to clearly understand what is the problem that this specific phenomenon is trying to solve. What is the economic reality of this transaction? Once you understand that, then the accounting and how it's prescribed will start to make more sense and will be more relatable to you. Let me give you an example. If we look at financial instruments, the whole idea there is that there are 3 specific models on how to account for financial assets. But you see, there's actually a method to this madness. The first of which is amortized cost. The whole premise of amortized cost is that it's a basic lending arrangement where the holder of that specific asset wants to be compensated for interest and principal. So in effect, they're having a business model to collect contractual cash flows. That's why the accounting depicts the economics of that transaction in that I'm trying to earn interest which accrues on that asset, but also equally when the cash flows flow in, the asset that I have reduces over time. This is completely opposite to the fair value model, where the intention here is not to hold the financial asset to collect cash flows, but rather to speculate in the short term and earn trading profits. That's why fair value measurement is more appropriate here. We call it the fair value model, so that it depicts what you would earn if you were to sell this specific instrument. Can you see that two different business objectives, and I have two different accounting models to fairly represent the business objective? The last one would be fair value through OCI, where you have a dual model, where you want to hold the asset in the long term to earn interest and principal, but equally, when the opportunity arises, you also want to sell it. That's why the accounting shows both aspects, i.e., you record every single transaction that you would do if you were to record a financial asset at amortized cost. But in addition to that, you also show fair value changes because you do want to sell it when the opportunity arises. Can you see, guys? Simply through understanding the economics of the transaction, you then start realizing why the different models are put in place. Another aspect could be, for example, the difference between a provision and a liability. So the whole premise of a provision is that it has uncertain timing or amount. So because of the uncertainty associated with it, you therefore measure it at some type of present value basis. You estimate what is the amount you would pay if the obligation were to materialize. The fact that it's uncertain in timing and amount doesn't change the fact that you've incurred it and you have a present obligation. And that's why we still record it in our financials, obeying the accrual principle of accounting, but equally we understand the uncertainty, and that's why we do a fair value measurement. Contra to that, you can have an obligation that is contractually or arises from a contract, but then there's more certainty on the amount. For example, you could enter into a contract with a supplier to buy goods on credit. In this case, there's a contract between you and the supplier. You understand and it's certain the amount that you'll pay at a specified future date. So this is a financial liability, and therefore you recognize it at an amount that's reflective of the cost that you will have to pay it out. So two different liabilities with two different economic phenomena, and therefore the accounting models are trying to depict to their best potential what's happening on the ground. The minute you start trying to understand these links, trying to understand the economics behind transactions, what the accounting model is trying to solve or trying to depict to the users, then you'll start being able to practically understand the subject, and it becomes more relatable to you, and you don't have to cram anymore. You actually understand what you're doing. But many of you may be asking, well, sure, Kandi, that's all well and good, but how exactly do I start understanding the why behind the topics that are embedded within financial accounting? The first advice that I would give you is that start challenging your lecturers in the lecture room, right? Your lecturers have the expertise and know-how in terms of the topic. So instead of just accepting when they say process this journal, ask the question, well, why am I processing this journal? What is the economic reality behind this transaction, the substance behind the transaction, and why did the ISB decide to depict the substance of the transaction in this way? When you start asking those poignant questions, what ends up happening is that you now start becoming immersed within the subject. You immersed within the subject, and ultimately that's when you start becoming more successful. The second advice that I would give you is that consult as much as possible, consulting in the lecture room, consulting outside, asking those difficult questions, and understand that your job is to ask probing questions, and you don't have to have all the answers, but ultimately your lecturers, tutors are there to guide you, and the more you understand the why behind it, the more it becomes more practical to you. The third thing that I would advise you to do is that read the basis of conclusion. In hindsight, I wish I did this a whole lot more, right? But you still have the opportunity. Just by way of interest, the basis of conclusion is that thick book that you often buy that makes all your CTA books or your third year books larger than what they're supposed to be. But actually, what basis of conclusion is trying to achieve, apart from the fact that it's a large book, is that it's trying to explain the rationale behind why the ISB decided to reflect the specific accounting treatment for items the way that they are positioned in the standard. And that's a very good way to be able to make it practical and real life to you. So whenever you get stuck in terms of, I see this journal, but it doesn't make sense why they're processing it, or it doesn't make sense why the standard wants me to do this. Take a step back and go to the basis of conclusion. You don't have to read everything. Just read it every time you feel lost, every time you feel stuck. Go to it and you'll be amazed by just simply understanding the reasoning behind it as to why they decided to choose this specific approach. Then it'll make sense why the standard looks the way it does. And equally, guess what? When you start immersing yourself within this type of deep learning and understanding the why, your theory answering becomes way better. You start excelling in theory questions because now instead of just dumping the information, you actually understand what you're actually doing. And that will make you more precise, firstly, as you deliver your theory questions, but equally, it makes you more poignant and more direct to solving the issues. And so that you then start excelling in those type of questions. Another piece of advice that I would give you is that start looking at themes and relationships between the different standards as you learn. And that also can be a way to be able to learn effectively. Now, our brains are very good at learning via association, right? This is a scientific phenomenon that when your brain is able to associate a new idea, event, or information that you're learning for the first time with something similar that you've seen before, you are more likely going to understand it better as opposed to someone who understands it or tries to learn it in an abstract manner. So whenever you learn something and you identify a theme in one standard or one section, try to relate or try to compare it to other sections. For example, if I think about something like fair value measurement in my mind depicts uncertainty. The more uncertain you are in terms of from a value perspective, the more likely you are going to choose or opt for a fair value model, because a fair value model depicts more clearly that uncertainty. That's why, for example, when you're holding an investment for trading in IFRS 9, typically you measure it at fair value. That's why in IFRS 15, when you've got variable consideration where you're not certain whether you'll get the amount, you try to estimate the probability or weighted average outcome or most likely outcome on a present value basis on those specific items. That's why provisions are measured at fair value as well. That's why in all instances, in terms of uncertainty, you use that model. They are themes. And when you start identifying these themes, you're then better positioned to understand the information more clearly, and so that you can be able to excel in your studies. The third thing that I want to talk about is the importance of answering theory questions. Now, let's face it, many students struggle with theory questions, and for various reasons. The obvious and more clear reason why is because the nature of how the topics are normally introduced is via calculations, journals, and visual depictions in terms of disclosure. Because you get introduced to the information for the first time via calculations in the lecture examples, it is more clear to you that this is how it's supposed to be. You are more likely to relax and think that this is the only way in which the information can be examined. Unfortunately, the way that the syllabus is going now, for you to become a chartered accountant, the value is actually in understanding the principles and being able to explain them. And that's why there's a focus not only at a third year, but at a CTA and even at an ITC level to do more theory questions. Now, for you to be able to excel, you then have to be best placed to answer theory questions effectively. Now, there's a specific framework that I used to use when I was in university, and it's quite common. It's called IPAC, right? IPAC is an acronym for issue, principle, application, and conclusion. Now, many of you may have heard of this acronym, but I want to specifically talk about it in terms of how can you use it as you answer theory questions with financial accounting. The first thing that you need to understand is the issue. The issue is the most important thing that you can do or identify if you want to be successful in theory questions. Often the mistake that students make is answering what they think the required is telling them to do, rather than actually answering the required. And really, I advise you, before you start answering, actually look at what are they asking me? What is the issue? The issue tends to be the technical question, the open question that is being examined. Now, once you understand the technical issue, before you start jotting down and writing on your page, take, even if it's a minute or two, planning what you will answer in terms of asking yourself, okay, what is the technical issue? What exactly are they asking me? For example, a theory question may say, discuss the accounting considerations. Now, accounting consideration is broad, right? If you think about your typical standard, which outlines the accounting considerations for a specific area, it starts off with scoping. So scoping talks to whether or not this transaction is within the ambit of the standard, right? So you always want to start off with scoping and definitions, applying the definitions, applying the scoping paragraph to see if that transaction is within that scope, whether it's IFRS 9, 15, whatever the standard is. The second thing is always recognition. Recognition is, when does that specific asset or liability get recognized in your books for the first time? The third thing is measurement. How do you measure it? And measurement can happen in two instances: initially or subsequent. Initial measurement typically tends to be cost. In some standards, they talk about fair value. It's very important to discuss that. Then the next one is subsequent measurement. After you've measured it initially, what do you do over the life of that instrument, the life of that asset, the life of that liability? What accounting do you use? If it's a PPE asset, do you use the cost model or the fair value model? If it's a financial instrument, do you use amortized cost or fair value? If it's an investment property, do I use cost model or fair value model? These are all the different questions that are answered under subsequent measurement. Thereafter, you tend to have the derecognition requirements, which is, when do you remove the asset or liability from your balance sheet, right? And then lastly, there would be presentation, and then there would be disclosure, right? So a question that says discuss the accounting considerations would be broad, meaning you'd have to discuss each of these elements, right? But where a question limits you and says discuss the measurement within IFRS 15, then you must do that. Forget about recognition, forget about classification, talk specifically to the measurement provisions of IFRS 15. And that only comes with actually understanding the required. So that's the first thing. Be clear on the issue. The second thing is that once you understand the issue, then you jot it down, and then you get marks for actually writing it down in your solution. But then you apply the principle. The principle is usually the requirement in terms of the standard, right? Now, the trick here is, when you're answering the theory questions, you don't have to write verbatim every single thing that's in the standard. Pick those specific items that depict the scenario more effectively and put them down. At most, I would say 1 or 2 sentences on the principle is enough for every issue. You don't have to outline or rewrite the standard. Don't make that mistake. The marks are limited there, so avoid wasting your time. The third thing would be application. This is where the majority of the marks are earned. And most importantly, what you want to be doing here is actually going back to the scenario. Look at the scenario. Understand what are the different items that were mentioned, and to your best of your ability, cross-reference and use that information in the scenario in order to apply the specific requirements in the standard. For example, if I'm looking at a leasing question, right, I know that leasing talks to, for example, the ability to direct the use of the asset, as well as obtaining substantially all the economic benefits of the asset. That's in terms of whether there's a right of use of an asset. In addition, it wants me to identify whether there's an explicit asset that I can identify, or implicit asset, what we call the identified asset, and whether there's a substitution right. So in the scenario might tell me that I've got a printer, right? Again, that's from the scenario. Then you'll mention there's a printer, therefore it's explicitly identified. The standard says that an identified asset can be explicitly identified. Then you just mention there's a limited has a printer with this registration, therefore there's an identified asset that is explicitly identified. The third, then you might want to talk about substitution rights. Then they might mention, oh, by the way, in terms of substitution rights, the supplier is located far away from the customer. There's significant transportation costs that are incurred to basically transport it. They don't have printers readily available, and then maybe the printer is specialized to work in that specific entity. Again, This helps you. Instead of, you know that you have to prove that there's a practical ability for the supplier to substitute the asset, instead of using that information, just distill it simply to say the cost of transportation is high and the printers are customized, making it less practical for the supplier to substitute it. There are your marks, 2 marks that you've earned. Then the next requirement might be, is there an economic incentive for the supplier to substitute? And the answer would be no, right? Because of the high transportation costs and because they don't have any readily available assets, it wouldn't be advantageous to them. This is what I'm talking about, guys. Use the information in the scenario and interlink it with the requirements in order to score the mark. The requirements alone is simply not enough. The third thing that we talk about then, after you've scored the bulk of your marks, applying to the scenario, to the facts that are depicted, then you have to conclude. Don't make the mistake of forgetting to conclude. There is an easy carry forward mark in all theory questions for simply concluding, therefore this is a lease, therefore this is not a lease. Simply state that and score your easy marks. Now, this is what I did, and this is what can help you as well as you want to excel in theory questions. What I would also recommend if you want to do well in theory questions is, number one, get your lecturers and tutors involved, right? So every time if you struggle with theory questions, take 1 or 2 questions that you do every week and then have someone independent look at them, whether it's a tutor or lecturer, to see how you're writing and whether you're on the right track. Another thing that you can do specifically in order to maximize this is practice, right? Practice, practice, practice. The more you start seeing how the solution structures the theory equations or the theory answers, and therefore you can cut the amount of verbiage you use, or you can expand in order to be aligned to what is expected to you, right? Now, once you've mastered the theory questions, right, is that enough? No, absolutely not. You then have to start looking at what other type of exam technique can I use? And this is the fourth element, right? Now, there are various exam techniques that worked for me that I think you should be aware of, especially if you want to succeed in a subject like financial accounting. The first of which is score all your easy marks first. Now, your easy marks are as simple as drawing up all your skeletons. Now, in all questions, there's often answers and there are often questions to the effect of, please do a statement of comprehensive income, a statement of changes in equity, or a statement of financial position. You already know before the test commences what those statements look like. So instead of waiting for the specific question to commence from your end, draw up all the skeletons within that question that are linked. Score all the easy marks. For example, where profit before tax is given and you're doing a taxable income calculation, put it in so that you can score your mark. Don't wait. Score every single easy mark that you can before you start doing any heavy lifting. That's the first thing that I would recommend. The second thing is that understand that questions may be linked. For example, because accounting has debits and credits, there might be a portion of that journal that affects the asset side, and there might be a portion that affects the income side. And this is more prevalent, for example, where the question asks you for the statement of comprehensive income, and then it asks you for the statement of financial position. So as you populate information in the statement of financial position, quickly go and populate it as well in the statement of comprehensive income. Think about the journal, think about the accounts that are affected, and by all means score those marks. What is inefficient is basically doing the income statement alone and then going to the statement of financial position. You run the risk of missing out marks and actually not being successful when you do that. So please make sure that you never forget that. The third thing that I want to talk about within exam technique is always cross-reference your workings, right? In some universities, they are very strict on this. You can do all your workings, but if they are not cross-referenced and to where you did it, then you don't score the mark. So make sure you cross-reference your workings. And also, as you do the workings, as and when it's possible to populate information, go and do that. So if you've calculated the depreciation of an asset and now you have an answer, go and take that number and put it in the statement of comprehensive income under the depreciation line. Don't wait until you've done all your workings to transfer them. Because the reality is that if the information is not transferred into the solution that is required on the required question, you won't score the mark. So put it in there and cross-reference to the workings. Again, You'll only get good at this by practicing questions, practice answering them simultaneously, practice scoring the easy marks. This can be able to give you the confidence to do well on. The next thing that I want to talk about is subject specific advice, because it's important. There are certain specific topics within financial accounting that you should always make sure that you're on top of them if you want to be successful. The first of these is consolidations, right? Consolidations, in my opinion, saved my financial accounting journey. If I can share a story, when I was in financial accounting too, I struggled badly, guys. And when I say struggle, I was failing. I failed from test 1 to test 2. The year mark in June was horrendous. But then I remember the students that had passed financial accounting too told me that by the time you get to finals, you'll then do consolidations. When you get to consolidations, please make sure that you master it. And guess what I did? I made sure that I mastered consolidations. And at the end of the year, I actually ended up with the year mark of about, high 60s, if I remember correctly, in second year. So I moved from failing to having a year mark that was a passing grade in the high 60s. And that can happen to you as well. So my advice to you in this type of topics, especially for financial accounting, is that it's always important to understand consolidations. And within consolidations, you then are able to outline specific elements. For example, understand the concept of adding A plus B, understand the concept of having one economic unit and trying to understand what are the transactions outside that economic unit. Understand intercompany transactions and how intercompany transactions essentially are eliminated, whether it's inventory, whether it's PPE, as well as understand the classification behind it. Trust me, guys, after I'd mastered consolidations in second year, I was good to go. This helped me get a distinction for financial accounting in year 3. It also equally helped me get good marks in year 4, as well as ITC. It will definitely save you to understand consolidations, master it. And even when they start adding different layers, for example, in third year, they start adding changes in holding, or maybe in fourth year, they start adding foreign subsidiaries or foreign operations. That's only a specific element. In a console question, let's say, for example, out of 50, you'll find that the foreign console component is only like 5 marks, or the change in holding component is only like 5 or 6 marks. The majority of those marks are still coming from the consolidation basics. Make sure that you understand the consolidation basics. The second topic that becomes increasingly important in my mind is understanding IFRS 15, right? IFRS 15 is part of the suite of standards that are important in your studies, right? What I found with IFRS 15 is that, first of all, it's such a practical subject or practical topic in practice, and therefore they'll always examine it even in your school level. So make sure you understand IFRS 15, right? And also the other standards that are prevalent. So within IFRS 15, look at things like, do I understand the 5-step model? Of course. But trips up a lot of students is that they don't actually understand how to get to the journals, how to get to the numbers, right? Because usually when they teach IFRS 15 from the perspective of the 5-step model, so do you understand the difference between a contract asset and a receivable? And how a contract asset arises when there are more than one condition before you can recognize. So for example, it's not only passage of time, right? But also there's some type of approval, something else that must happen before you earn the money or before the amount becomes due to you. Whereas a receivable, it's already due to you. It's only a matter of time before you receive it. Understanding the differences between the two will help you. Then understanding the specific case scenarios. For example, the specific provisos or provisions around principal versus agent, around warranties, around bill and hold arrangements, around customer loyalty programs, around sales with the right of return. These are all topics that you can actually study before you get to a test, especially when you get to fourth year and it's an open book exam and you also have the illustrative examples. Master the topic so that if they come in questions, you know exactly where to go to get the journals, exactly where to go to get the principles. So it's always worthwhile to understand these topics within IFRS 15. Another section that is important is cash flows. Now, the reason why they like cash flows is simply because of the integration possibilities. Cash flows examine a wide variety of standards at the same time because, let's face it, you need to understand what's happening in order to be able to deduce the cash flow, right? So the approach would be, whether using the direct method or indirect method, understand the differences. Equally, what's important there is actually understanding how to draw the T accounts. Now, the T accounts are important because you need to solve for the specific cash flow. So whether it's receivables or payables, or whether it's investing activities or financing activities, you draw up your T account and you try to determine what are the transactions that took place using your knowledge of accounting and the different standards. Then the balancing figure typically becomes the bank account, right? So understanding those approaches in terms of cash flow is key. So practice cash flow question, guys, whether it's cash flow on a standalone level or cash flow at a group level. You can never go wrong by spending time to master the cash flow statement. Another topic that get examined, again, these are other practical topics that are examined quite frequently because of their practical nature in practice, is IFRS 16. Leases, understanding within IFRS 16 how to get to a lease and what happens when you don't meet the definition of the lease. Because from a lessor perspective, it might be becomes revenue. From a lessee perspective, it might be just a normal expense, right? So understanding the definition of a lease and how the lessee and lessor accounting models work is key and gets examined quite heavily. Then other topics there on top of IFRS 16 could be your asset standards, right? Your asset standards, right? Understand your asset standards from IAS 16 to IAS 40 to IAS 38. Usually there are common themes, especially when it comes to recognition and measurement. The standards that tend to be, but understand the nuances and differences. For example, in IAS 38 and IAS 16, you only have the cost model and the reval model. Whereas in IAS 40, you have the cost model and the fair value model. Those are the nuances I'm talking about, and what distinguishes the different assets between intangible, which is tends to be a non-physical form of asset, to a tangible sort of asset that you use in your production processes or for admin or to generate or to supply goods or services, PPE, or actually to rent or for capital appreciation, which is investment property. Understanding these differences will position you. Other topics could be deferred tax. I found that deferred tax is such a pervasive topic as well. So instead of cramming deferred tax and how it works, actually understand it, and that we're trying to reconcile tax differences, right, to accounting differences. In that, if we're using the accrual accounting concept for the income statement before tax, it makes sense that the income statement after tax should also obey that. Otherwise, we have a mismatch, right? And how we specifically do that or correct this mismatch is that we know that the current tax line cannot be changed. That's coming specifically from the revenue authorities. However, the deferred tax line is there to correct potentially the tax expense line so that it's aligned to what's happening before tax. For example, something like income received in advance. Income received in advance typically will not touch your income statement, right? You debit bank, you credit your contract liability. However, from a tax perspective, that income is taxed at the early of receipt to accrue. So actually you'd be taxed. So there's something on tax expense. The question is, does it make sense that you have nothing in the income statement from a revenue perspective because you haven't rendered the service? However, you start seeing a current tax line. Does this make sense, right? From an accrual concept accounting, it doesn't, right? There's a disjoint here. The fact that I don't have anything in the income statement means that I shouldn't have anything that tax expense. So that's when deferred tax comes in and says, okay, there's a temporary difference here between accounting. Then you look at, okay, I have a liability. Then the definition of that liability says, what is the carrying amount? Less amounts not taxable in the future. So because it's already taxed, then it's like if the carrying amount is 100, therefore the full 100 is not taxable. So there I get to a position where the carrying amount is 100, right? But my tax base in this case would be the carrying amount of 100 less minus 100, which is not taxable. So it's zero. So I've got a carrying amount of 100, a tax base of zero, and a temporary difference of 100, right? And that's a deductible temporary difference given that carrying amounts of liabilities represent outflows of economic benefits in the future, with which ultimately reduce tax. Because future tax is reducing, I then recognize a deferred tax asset for that deductible temporary difference. And can you see what's the journal for it? A deferred tax asset would be debit deferred tax asset, credit tax expense. So I've got a credit in my tax expense that equals the debit in my tax expense from my current tax, which cancel each other out. So overall, tax expense is then left with a nil amount, which is consistent with what I saw in the income statement. Can you see, guys? I never crammed this, but I actually understood what is the purpose of deferred tax and what is it trying to achieve relative to what I see in my income statement to obey the cool concept of accounting. The minute you start seeing these links, especially with something like deferred tax, the more successful you start becoming, not only to doing the calculations, but also in answering the theory questions, right? Other advice that I would give you in terms of topic specific advice is then obviously IFRS 5, which is also quite topical, disposal groups. Understand that, how it works, and the definitions will also be helpful to you, right? And then obviously the other bespoke topics like IS 37, borrowing costs, and all the other topics that you need to consider in order to become successful in financial accounting, right? The next thing that I want to talk about that is important is some of the general advice that I want you to take away as it pertains to financial accounting, right? Now, the first general advice that I'll give you is that, especially if you're in CTA, learn how to read a standard, right? You can actually start learning how to read a standard the minute you start doing financial accounting. All standards tend to follow a similar structure. They start up with an objective in terms of what it's trying to achieve. Then there's a scoping paragraph, which tells you what's in and what's out in terms of that standard. Then it goes through and looks at what are some of the key definitions in order to understand what applies to what in the standard. Then it's recognition, which is when do you recognize or when do you include the item in your financials for the first time. Then it's measurement, which talks to at what amount do I then reflect this in my financials, both initially and subsequently. Then it goes to derecognition, which is when do I remove this item from my financials. Then after derecognition, it then goes to presentation and disclosure. Now, when you start unpacking the standards in terms of this framework and understanding what does recognition mean, what does measurement, what does presentation talks to how does the financial makeup look like. Disclosure means how will my users see this in the financials? What should I include? All of this information is important because then if you know how to read a standard, it becomes more practical to you, especially as you read and do more standards. You can then flag appropriately, especially in fourth year, and do well. Right. So get into that habit. Then avoid theory dumping, as we've already talked about in the theory section. Theory dumping does not work. Use the IPAC principles that we talked about. Cramming simply does not work for financial accounting. So, for example, having a list of tax reconciling items might look like a good thing, but at the end of the day, I start throwing a curveball in financial accounting, you will be found wanting. So instead of you waiting for the moment where curveballs trick you, focus more on the why, as we've mentioned, and how the principle applies, then cramming the information and cramming lists that don't help you in any shape or form. Practice is key for financial accounting, and consulting, as what we've mentioned, very important for this type of subject. Right, guys? Hopefully now you're better equipped to do well in financial accounting. Let's chat in the comment section. Are there any things that I've missed in terms of what I've explained today? Let me know. Was this helpful? If it was helpful, please give it a thumbs up. Let's chat in the comment section. Let's share. Let's make sure as many people are able to get the message and help it out. Make sure your friends watch this video, especially if they struggle with financial accounting. And ultimately, my hope is that we're now going to be better equipped to do well in this subject. Remember, guys, I believe in you. Until we meet again, thanks. Bye.